The world of financial markets has to change. With all that has happened since Lehman and the great financial crisis, banks are struggling with profitability. The business model is broken. The next evolution in technology holds much promise, which we need to unlock. Financial services, at its core, has the role of efficiently moving, allocating, and pricing money and risk in an economy. But the industry has become very complicated. Myriad varieties of post-trade processes, many intermediaries and middlemen, as well as a lot of regulation. The industry is highly concentrated with just a small number of very big centralized financial market infrastructures. A recent US study suggested that this sector accounts for 7.5% of GDP. How efficient that sector is really matters. That is a big challenge. We have exploited computer power to become as efficient as possible. That evolution has made it necessary to have quite a hierarchy with multiple intermediaries and middlemen. The drive for best practices, together with the impact of regulation, have resulted in a lot of dead money. Dead because we have collateral, cash, and securities in many places. The balance sheet is highly constrained. We can only reduce settlement risk by increasing credit risk. As an industry, we need to find a much better solution for the future. We haven't always had middlemen, and we haven't always had computers. In the early 17th century, companies and investors had a very simple relationship. The investor exchanged cash for his shares, a bearer instrument, a piece of paper. But with all that paper, things were hard to manage unless the issuer and investor were in the same place. And some issuers were not so honest. Sometimes investments proved not to be worth the paper they were written on. In today's jargon, we could call this peer-to-peer market with peer-to-peer settlement. Blockchain, tokenization, much talked about. What are really worth talking about are peer-to-peer markets with peer-to-peer settlement. The technology behind blockchain enables a digital asset to be definitively transferred between issuer and an investor. The technology turns the asset into bits and bytes, which is not new. What is different is the process of tokenization enables any buyer to be absolutely sure that the asset, the thing they have bought, is genuine and has been sold only once, and its exchange is final, eliminating the need for many layers of intermediaries and middlemen. And with it, we have the efficiencies and resilience of today's centralized systems without the centralization. Investors will connect directly to issuers on chain with today's technology, allowing us to overcome the trust problem. We are headed back to where we started, peer-to-peer marketplaces and settlement. Across financial services, as an industry, we are investing heavily in tokenization and in trading or price discovery venues. There are three key ingredients to tomorrow's markets. First, tokenization of assets. This is about new assets and existing ones. Second, we need exchanges and price discovery venues. The third ingredient, a means of payment on chain, enables us to make effective use of the potential of blockchain and peer-to-peer markets. Putting these things together, we have the opportunity to lower costs, risks, and economic rents in the financial system. We need a means of payment that is on-chain. The team at Fnality has designed USC to fulfill that role, a central bank-accepted means of payment that works across different platforms and in multiple currencies. As we design the payment solution for tomorrow's markets, we could do what we have always done, have an account-based structure where there is an account in every system. This is not great. It slices up our liquidity and drives up cost. Or we could be smarter. We would need a whole lot less liquidity if we could point many business applications at the same pool of funds. We can be smarter because the technology that is available allows different chains to easily interact. This is called interoperability. All the time, the pool of liquidity stays the same. A single pool of funds serving any payment-related need. What you own on the chain is something we have called USC, a digital cash asset fully backed by collateral at each central bank. Fnality is building the foundations, a private chain in each currency. We then need to make the foundations usable. This means we have to coordinate and orchestrate with the platforms and business applications that want to use USC as a means of digital payment. Interoperability is the plumbing part, enabling those businesses and platforms to connect to USC for payment and final settlement. USC is about facilitating settlement in wholesale markets. It is not intended for retail. How much access there will be is something we will have to negotiate with each regulator. Although building proper foundations will take some time, Fnality is uniquely positioned with the USC offering to underpin the biggest change in banking in 50 years, a radical simplification. To make this happen, we have the support of the world's largest banks and financial institutions. For more information about USC or Fnality, or to register with us, please visit our website.